Picture this, the world's second-largest economy is grinding to a halt, with growth stumbling to its slowest clip in over a year, amid escalating trade showdowns with the United States. It's a scenario that could ripple through global markets and consumer pockets alike. But here's where it gets controversial. Are these tensions a necessary wake-up call for fair trade, or just a recipe for mutual economic self-destruction? Let's dive in and unpack what's really happening, step by step, so even newcomers to economic news can follow along. Just last week, official data unveiled that China's gross domestic product, GDP, essentially a measure of all the goods and services produced within the country, expanded by only 4.8% in the 3 months ending September, when compared to the same period the previous year. For context, GDP growth is like the heartbeat of an economy. It shows how much it's expanding or contracting. And this figure represents the weakest performance China has seen in 12 months. Released by the National Bureau of Statistics, these numbers come hot on the heels of China slapping tight restrictions on its exports of rare earth minerals. Those crucial elements powering everything from smartphones and electric cars to wind turbines and military tech. And this is the part most people miss. Rare earths aren't just fancy rocks. They're indispensable for modern electronics, making up about 17 rare earth elements that no other country can easily replace. This bold move has shaken the fragile peace in trade relations with the U.S., threatening to derail agreements that were meant to stabilize commerce between the two giants. This third-quarter slowdown isn't just a blip. It sets the stage for a crucial summit this week, where China's top leaders will map out the nation's economic strategy from 2026 to 2030. It's a pivotal moment, as the 4.8% rate marks a clear dip from the 5.2% logged in the prior quarter ending July. Yet, in a display of optimism, the National Bureau of Statistics highlighted the economy's strong resilience and vitality, despite the mounting pressures. They point to robust momentum in sectors like technology, think innovations in artificial intelligence and semiconductors, and business services, such as consulting and logistics, as the unsung heroes keeping things afloat. Beijing has aimed for roughly 5% growth this year, and so far, they've dodged a full-blown slump thanks to targeted government interventions, like fiscal stimulus packages and subsidies for key industries. But the plot thickens with U.S. President Donald Trump's swift retaliation. He's vowed to slap an extra 100% tariffs on Chinese imports, potentially jacking up costs for everything from toys to tech gadgets. U.S. Treasury Secretary Scott Bessent is pushing for diplomacy, planning meetings with Chinese officials in Malaysia this week to cool the flames and pave the way for a sit-down between Trump and Chinese President Xi Jinping. It's a high-stakes game of negotiation that could either defuse the crisis or fan it into something bigger. Before this latest eruption, Chinese companies were cashing in on the temporary trade calm with Washington, boosting exports to the U.S. by a solid 8.4% in September. Meanwhile, China's imports also ticked upward, signaling a bit of give and take in global trade flows. On the domestic front, industrial production surged 6.5% last month compared to the year before, with standout performers in cutting-edge fields like 3D printing. Imagine building complex parts layer by layer for faster manufacturing, robotics, those automated machines revolutionizing factories, and electric vehicles, the eco-friendly cars slashing fossil fuel use. The service sector, encompassing IT support, consulting firms, and transportation and logistics networks, also showed healthy expansion, reflecting a broader diversification beyond traditional manufacturing. Now, here's a thought-provoking twist. Some experts argue that these export controls on rare earths are China's way of flexing its dominance in critical resources, forcing the U.S. to rethink dependencies and invest in domestic alternatives, like mining projects or recycling tech. But critics counter that it could backfire, sparking inflation worldwide and hurting everyday consumers. What do you think? Is this trade war a strategic power play or a short-sighted blunder? Do the potential benefits of tariffs outweigh the risks of economic fallout? Share your views in the comments. I'd love to hear if you agree, disagree, or see a middle ground we haven't explored yet.